Ladies and gentlemen, good day and welcome to the Q4 FY22 results conference call of Mitsu Chem Plast Ltd, hosted by Kiran Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastukal Shah from Kiran Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I would like to welcome Mr. Manish Dedia, Joint Managing Director and CFO of Mitsu Chem Plast Ltd, and Ms. Kashmira Dedia, General Manager, Accounts and Finance. Manish ji, over to you, sir.
Thank you, Vastukal ji. Good afternoon, everyone. I welcome all of you for the conference call of Mitsu Chem Plast fourth quarter of financial year 2022. We continued with strong demand momentum in the fourth quarter and have reported strong revenue and profit growth for the quarter. As you all know, we have seen continuous rise in crude oil price. Our key raw material, polyethylene and polypropylene, is a crude-based product. Hence, the challenge was tremendous. But we have strategies at place which have enabled us to control our overall cost. Our EBITDA for the reported quarter has been 35% year-on-year jump, while net profit grew over 49%. The strong demand for our product was the revenue drive for fourth quarter FY22. We have controlled our overall cost and other expenses, which enable us to maintain our EBITDA margin to 11% plus level for the quarter. For full year FY22, our revenues were higher by 44% year-on-year, but higher crude link raw material pressurized our bottom line growth as PAT grew 19% for the year. Our debt repayment, however, aided our bottom line growth. FY22, however, was the landmark year as despite higher and volatile raw material prices, we crossed the revenue milestone of rupees 258.90 crore and net profit of rupees 11.51 crore. This has been a big achievement for all of us, and I thank all my customers, employees for helping us achieve this milestone. Now, to talk about the future, we see strong demand for our products. However, oil prices remain our main concern. WTI crude futures rose to $107 per barrel last week and were up almost 9% in April, gaining higher month after month with volatility coming from geopolitical disruption and COVID-induced demand slowdown in China. Russia-Ukraine war, UK imposing ban on Russian crude imports are keeping upward pressure on oil prices. Furthermore, Russia has also halted a gas supply to Bulgaria and Poland after the EU members continue refuse to pay gas imports in rubles. Accelerating energy crisis in Europe, China's virus outbreak further added fuel to volatility in the market. So all in all, we see crude to remain volatile with the upward bias in the near future. Global logistics prices, as mentioned in our last Concall, is another worry as it has risen due to higher crude prices and lockdown in key Chinese cities. This will not have any direct impact on our sales, but it could impact sales of some of our export-oriented customers, which can be a challenge for the company in the near term. Overall, we have been able to mitigate the crisis in terms of absolute growth, but going forward, and improvement in margins may likely be challenged in near future due to oil prices volatility. Your company, a leading manufacturer with more than 500 plus SKUs, is serving over 30 plus Fortune 500 clients in India. Our focus is to grow from this level and achieve new milestone in coming years. Our increasing and customized product portfolio, addition of client and increasing regional reach have positioned ourselves to leverage every growth of opportunity. As we ended FY22 on a highly positive note, we look forward to FY23 as a more focused growth prospect. Let me assure you, your company is growing and will keep growing with a happy customer and a strong product portfolio. Product innovation and value engineering continues to be our focus to enhance product portfolio and product quality. Business growth always faces adversities, and in the past 3 years, it was at peak due to COVID shutdowns, raw material price volatility, and export restrictions. I am happy to share with you that Mitsu Chem Plast stood strong against this difficult business hurdles and continued its right march towards growth. I thank you all for your support and faith in the company, which keeps us on continuous task towards new milestone achievement. Now I hand over the floor to Ms. Kashmira Dedia to discuss the financial performance during fourth quarter FY22 and financial year 2022.
Thank you, Mr. Manish. Good afternoon to you all. Now, I will take you through the financial performance of the company in last quarter. Your company witnessed strong demand growth in the quarter as well as the year. Financial performance for the financial year 22. Mitsu Chem Plast reports robust top-line growth for FY22. Revenue achieved a new milestone by crossing rupees 250 crore landmark. Total revenue at rupees 258.9 crore for FY22, up 44%. As indicated by Mr. Manish, the company has witnessed a sharp rise in raw material cost, which is over 63% for FY22 compared to 58% in FY21. To mitigate the pressure from the higher crude prices, we have strategically controlled operational cost expenses overall, which as a percentage to total revenue improved 230 bps to 26.35%. EBITDA for full year came at rupees 26.8 crore, higher by 10.8%, and EBITDA margin at 10.4%. The company has reduced its long-term borrowings by 10.7% to rupees 28.6 crore. This resulted in reduction in finance cost by 6.5% to rupees 5.59 crore. Net profit reported at rupees 11.51 crore, up 19% year-on-year, and net profit margin at 4.5%. Return on equity and return on capital employed were at 22.6% and 21% respectively for FY22. Company's operating cash flow was at rupees 8.2 crore and the working capital cycle improved to 84 days from 90 days in FY21. Debt to equity ratio stood at 1.32 as against 1.61 in FY21. This indicates strong growth parameters achieved during financial year 22. Now, let me give you product category-wise revenue breakup. Molded industrial packaging contributed 83.67% to total revenue, while furniture products like hospital furniture parts contributed 14% to total revenue. Infrastructure furniture and other contributed 2.39% to total revenue. Financial performance for fourth quarter FY22. Mitsu Chem Plast total income for fourth quarter FY22 registered robust 43% growth to rupees 74.7 crore. EBITDA improved by 35% to rupees 8.4 crore, while net profit grew by 19% to rupees 11.51 crore. EBITDA margin was at 11.2% and net profit margin was at 4.4%. As mentioned, higher crude prices affected raw material cost. Raw material cost to revenue were at 65%, namely 61% in FY21. Now, I open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Muskan Gupta from FY22 Capital. Please go ahead.
Good afternoon. Congratulations on your robust growth and achieving new milestone in revenue. I would like you to repeat the segment-wise revenue breakdown, and I would also like to know from the management of the company what their future plans are about the growth from each of these segments.
Yeah. So I think can repeat, Kashmira.
Yeah. So our molded industrial packaging contributed around 84% to total revenue, while the furniture product, which includes hospital furniture, contributed 14% to total revenue, and infrastructure product and other category contributed around 2.39% to the total revenue.
So this was your first question, and I think the second question was what is the growth for all these segments? So definitely, see, we are growing with a niche item, which is a hospital furniture and other items also, and also we are growing into packaging business also. So I think you'll see the robust growth in the near future in both the segments, especially furniture and packaging item. Hello?
Okay, got it. So can you give me some idea in percentage terms?
It will be a little difficult to give you on this percentage terms, but yes, because we haven't, right now the percentage already given, right? Yes, yeah, for the future, okay. Yes, ma'am, it will be not little difficult to give you in percentage.
Yeah, percentage terms in terms of growth.
No, I think I haven't understood the question right.
Yeah, I'm just trying to say that from each segment, what is the percentage of growth we can expect in near future or in long term or any time frame which the management has in mind currently?
See, there is a growth in the market. Already we have grown 50% in furniture, almost 50% in a furniture. You can see overall hospital growth in the near future is also very good in India. Also, there will be a very, very good growth in chemical and pharmaceutical industry. So definitely there will be a good growth in India. So with that, the company will have definitely will grow with that.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yeah, congratulations on a good set of numbers. I have a couple of questions. So primarily on the hospital furniture business, since it's one of the higher growing segments, could you give us some color on the type of sustainable gross margins for this business in the event that crude normalizes?
You need to repeat the last line. You said the last line. Can you repeat please?
Yes, sir. So what I'm asking is, the hospital furniture business, could you give me some sort of guidance as to what is the sustainable gross margin in case crude normalizes?
In case?
Once crude normalizes, sir, and your margins come back to normal, what would be a sustainable gross margin in the hospital infra business?
So, yeah, once I think crude settle down, then yes, you can see good growth in the company. Now, for the hospital furniture is always a higher margin, gross margin, than the packaging item.
Yes, sir, correct. But could you give me a ballpark number, like in a 5% range?
No.
Okay. Thank you, sir. Also, secondly, you in the last board meeting, I think you had approved a proposal for a QIP. Could you give us any color as to when that would be happening, or is that not possible?
No. So thank you. I think you are following very well. But there is we have not gone for only QIP. So there will be a further fundraising through any of the method. We are just working on this, and maybe very soon we will come back to you on this. We will announce in very soon. Very soon.
Okay, sir. Also, just one last question. As far as the borrowing goes, do you plan on reducing your debt further, or is it going to be at the current levels for the next 1 or 2 years?
No, definitely. See, with the current level, whatever we are reducing debt, that will be continue for the same one. When we raise some funds, that will be completely for a further growth only.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Hello, sir. Can you hear me?
Yeah, Akshay, can you speak a little louder?
Yeah, sure. So, what would be the volume growth in this quarter and year-on-year volume growth? If you can give the numbers for that.
Yes.
So you want the revenue growth for the last year, FY22?
Volume growth. So, yeah.
So kgs-wise, we have grown by 28%.
Okay. And at the outset, you had mentioned that there were some strategies in place to navigate through these tough times, in rising crude oil prices environment. So could you just outline brief about what were your strategies as such?
Akshay bhai, this is my little secret of Mitsu. If I tell you, then I'll have a competitor.
Okay. No problem, sir.
I'm just kidding there. But no, I think many strategies we have worked out on this, and to how to cut down the cost, overall, to get the maximum output of the machines, and many good things and the systems on the place.
Okay.
Yeah.
And sir, regarding that hospital infrastructure, so are we supplying to tier 2, tier 3 cities hospitals, or we are targeting tier 1 hospitals? So if you can give some.
I'll just clarify your questions in a little format. So we do not supply our hospital furniture to hospital directly. We supply to hospital bed manufacturer, and they supply to hospitals. Now, further your question. So we supply all over India. So from Jammu to Chennai and from Calcutta to Mumbai. I think most of the states we are covering.
Okay, sir. And sir, in the molded packaging segment, what is the pricing power we enjoy with our customers?
So again, it's a difficult question. So like, yes, with the quality, Mitsu is a name for a good quality. But yes, customer always please us for good rates. So, but anyway, we enjoy little good than other competitor.
Okay. Thanks a lot for answering questions, and sir, all the best. Thank you.
Thank you very much.
Thank you. The next question is from the line of Prem, an individual investor. Please go ahead. Mr. Prem, please go ahead with your question. Your line is unmuted.
Yeah, first of all, congratulations for successfully mitigating raw material costs. My question is towards trade receivables. There is a significant jump in trade receivables from last year to this year. If I remember correctly, it jumped from 29 crore to 41 crore. Can you please throw some light on this?
Yeah, definitely. If you see the total revenue jump, it is around 44%. So our receivables, as far as in days is concerned, it is same in both the financial years. It is 49 days for the FY21 and same 49 days in FY22. So the growth in the receivable is purely because of the growth in turnover.
Okay, thank you.
I answered your question, please.
Yeah, sure. Yes.
Thank you. The next question is from the line of Manan Puradia from MKP Securities. Please go ahead.
Hi, sir. One last question. You've spoken about your blow molded custom or injected molded custom service that you offer to your customers. For right now, are you doing any of that? Like, is that a portion of your top line where you do customized blow molding and injection molding for your customers?
I think, sir, can you just go little away from your phone? Some of your words are not being understood by me properly, sir.
1 second. Can you hear me clearly now, sir?
Yes. Now it is perfect.
So what I was asking, sir, is that you've spoken about your customized products for your customers, where you create custom injection molds for them. Is that currently a portion of your top line?
Yes, everything. I mean, like, see, we do many customized mold for our customers.
Okay. And what segment would that be in? Like, would that also be in the packaging segment?
Both. Packaging and hospital furniture, both.
Packaging and hospital furniture, both. Right.
Yeah. But maximum side also hospital furniture.
Okay. And okay. So obviously that would be a higher margin business, right? Considering it's a customized product.
Yes.
Yes. Okay. Thank you, sir.
Thank you, Mananji.
Thank you. Before we take the next question, reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Yashwanti Khudkar from an individual investor. Please go ahead.
Yeah, this is Yashwanti Khedkar. Okay, congratulations for a very good set of numbers. I have 2 questions. You have given me the contribution coming from the 3 different segments, that is the molded product, furniture and hospital business, and infrastructure. I just wanted to understand what is the growth recorded by each of the segment.
What is the
growth recorded by each of the segment on FY21? Like molded product, how much the growth has been recorded over FY21? The same in the case of the furniture and hospital furniture business and infrastructure business.
Okay.
Yeah, so furniture, we have grown by almost 50%.
Okay.
As far as our packaging is concerned, the growth is around 40 to 43%.
Okay. And infra?
I think that's not too much in that.
1% you can say.
Yeah.
0.5 to 1%. Okay.
So you see this furniture and hospitals growth, because even FY21 the hospital and furniture has grown at a very good number. So you see this segment will continue to grow at this 50% mark going forward? How is the demand?
At least next for 3 years to 4 years, yes. Because government has chalked up many plans for, that medical development plans by our Prime Minister. So I think many things are coming up in all over India, and which will be beneficial to Mitsu Chem.
Okay. Sir, and like we have a strategy where we are seeing there is an improvement for the Q4 margin. So do you think the margin will be at least maintained going forward, or you see some pressure coming in for the margin going forward?
No.
What is your call on how do you
Definitely our try will be to get the better margins than whatever right now we have it. Yes, definitely if the crude volatile will be there, then will be pressure. But definitely we'll maintain this current margin. That is our main objective.
Okay, sir. And I just wanted to understand what is our current capacity and the utilization for the FY22?
So our utilization is around 64% for the whole year.
Okay.
Capacity is around 22,800 metric ton plus, approximately.
Okay. Any plans to increase the same?
Sorry,
Any plans to going ahead with this as there is a new the more demand coming in from the hospital furniture and the increased demand coming from the packaging?
Yes, definitely. We will definitely update once we finalize the plan. Definitely we will update.
I think that's it from my side, and congrats and wish you the best for the coming quarters.
Thank you, ma'am. Thank you very much.
Thank you. The next question is from the line of Muskan Gupta from F Interest Capital. Please go ahead.
So just now someone asked about the growth recorded in each segment over FY21, and it was just told that furniture segment grew by almost 50%. So was it just based on the COVID situation that the hospital bed demand grew at a large extent, or there were some other growth triggers as well?
Yes, so I think part of that was for a COVID also. But I think 2 years ago, I think Prime Minister has announced many schemes for bringing medical services and hospitals all over India, and that's where you can see the growth. So I think government has allocated, I think, a good number of funds, and on that fund, many people are going ahead for expansion on expanding their beds. Going ahead for new hospitals and all. So you can see further growth also in this particular segment.
Okay. And so someone also asked that, and the clarification was provided from the management that we do not provide the hospital beds directly to the hospitals, but instead to the manufacturers. So in that case, still, what is the target segment? The manufacturers which we are sending, who is those manufacturers supplying to tier 1 hospitals or to tier 2, tier 3 hospitals? What is the class of clients ultimately?
See, we supply to all the manufacturer who makes a bed. Now, we supply just the plastic panels to them and the accessories for the same. They assemble at their place, and then they supply the complete bed to hospital. So they supply to each and every hospital, which is a tier 1 or tier 2 cities as well.
Okay. So we are only supplying the plastic panels and accessories. All right. Got it.
Right.
Thank you.
Thank you.
Thank you. The next question is from the line of Nairit Gara, an individual investor. Please go ahead.
Hello, sir. Good afternoon, and congratulations on a wonderful set of numbers. Am I audible?
Yes, you're audible.
Yes, sir. So I had a question regarding the auto components segment of our business. Can you please throw some light on the revenue contribution by this vertical?
Okay, so it's a very less revenue overall. So it is a degrowth from the last 2 years. We are now there is a good degrowth in auto. Now there are many things coming up in auto. In last 2 years time, the auto was also not doing well. Definitely, auto is doing now. Now it is well. But we haven't, we have started with that auto things. Also, we have utilized those capacity into hospital furniture already. So the capacity also will be concerned for auto parts.
Absolutely. So just another follow-up question. So maybe with the, restoration of the semiconductor crisis, if it betters, are we expecting maybe a better performance on the auto component side, or are we planning to shift the auto capacities into higher margin businesses like the hospital segment?
No. We are open for that. So if some good opportunity comes, and we are ready to serve that also. But as of today, we are not very sure.
Okay. And the overall, in terms of capacity, utilized by all segments, at how much percentage are we functioning right now?
Sorry, come again?
So in terms of overall capacity, how much we can produce versus how much we are producing right now, what is the percentage, if you can give me a rough number?
Overall, see, I can tell you, in plastic industries, you can produce, whatever your capacity from that, you can produce 85%, which is the maximum. And out of that, we are producing right now 64%.
Right. So maybe, 2 years down the line, to expand further and grow further, we'll need to have some sort of capex come in to expand capacity, right?
Definitely. But we have a in-house capacity also. So from 64 to 85%, at least we can go in that line also. And where we are seeing systems in place, so we are optimizing our production capacity.
Absolutely.
Yeah.
And so just one final question. So the inflationary environment, in the inflationary environment that we are facing currently, how much of the price increase in crude and other raw materials are we able to pass on to customers in terms of a percentage number, if you can give me, for the last quarter maybe?
Yeah. So the last quarter, I think it took little time to pass on the prices. But yes, definitely we could pass on at least 80 to 90% of the cost. But it takes some time. Sometimes it doesn't happen overnight.
Yeah, absolutely. So maybe going forward for the next couple of quarters, if the crude prices were to remain elevated, we can expect about 80 to 90% of the price to be passed on to the customers?
More than that.
More than that. Okay.
More than that, yeah.
One last question, if I can, please.
Please go ahead.
So we mentioned that the current liabilities were around 28 crores in long-term borrowing. Sorry, non-current liabilities.
Yes.
And we're being financed at about, the financing costs were about 5 to 6 crores for the same.
Sorry, what is the question exactly?
Yeah, so I'm just confirming before I get to the question. So the financing cost for the long-term liabilities is around 5 to 6 crores.
5.6 crore, right?
So finance cost includes both.
Sorry?
Finance cost include both long-term and short-term.
As well as the current. Okay, perfect. So yeah, that was just my question, because if it was just the non-current liabilities, it would have been a very high finance cost.
No.
Yeah, okay, perfect. Thank you, sir.
Thank you.
Have a wonderful day, sir.
Yeah, same to you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Yashwanti Kedkar, an individual investor. Please go ahead.
Yeah, thank you for the opportunity once again. I just want to understand, have you added any clients in the last quarter? This is the one.
Have you added?
Any new clients in the last quarter, that is the fourth quarter?
Yes. We have added. Some of the new clients also we have added in last quarter 4.
Okay. Can you quantify them?
Sorry?
Can you quantify them? How many numbers of the new clients have been added?
15 plus customers in last quarter.
Okay. Then how much of the top 10 customer contributes?
Can you little louder? You're not little audible.
Yeah, I just wanted to understand what is our top 10 customers contributes to the overall revenue.
So our top 20 customers are giving me around 75 to 80% business right now.
Okay. And sir, what is the scene on the export front? Till last third quarter, we are seeing there are lots of issues because of the freight charges and many orders were cancelled. So how the thing has been settled in the quarter 4, and what is the outlook going forward?
Okay. So see, Mitsu Chem doesn't export directly, but Mitsu Chem gives packaging material to exporters who fill their chemical and who fill their material and they export. So definitely, I can say in the quarter 4 export was little good than quarter 2 and quarter 3.
Okay. Okay. And okay. So that is our indirect exports, right?
Yeah, we have indirect export. Yes, ma'am.
Okay. That's it from my side. Thank you so much.
Thank you. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Nilesh Karani from Magnum Equity Broking Limited. Please go ahead.
Hi, sir.
Yeah, hi, Nilesh bhai.
Audible?
Yes, audible.
Sir, only one thing, like, see, right now, I think that recycling things are, very opportunistic in our industry. So how we look at it, can you just throw some light on that?
So your question is Mitsu to go in that recycle business or what exactly? I did not understand.
Your products basically are mostly of virgin, correct? They are all virgin products.
Yes.
So once that recycle things, if they allow, like, 10% or 15% recycle listing to be used, the plastics in your industry. So,
yes.
How would we look at your future, like how it will pan out and what would be the impact on our company, like?
No, I don't think so. There will be good any impact on the numbers. But yes, see, government are doing many changes in a packaging items, and like they will mandate in another 1 or 2 years that you have to mandate PCR granules. You have to mix that PCR for around 10 to 15%. But yes, government has taken a very good initiative, but the problem is the availability of raw material. And definitely, so, customer is also asking for the same. But it will take some time. It will take some time to implement because, availability of raw material and all the system comes on a place. And I think, yeah, government is in a hurry, but I think it will take around 1 year to 2 year time, according to me.
Okay. Thank you, sir. Thank you so much.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Vastupal Shah for closing comments.
Thank you, everyone from management team and the investor fraternity to join the conference call of Mitsu Chem Plast Limited. If you have any queries, you can write us at vastupal@kirinadvisors.com. Once again, many thanks to everyone. Thank you.
Thank you. Thank you very much.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.